Hello, I'm Anthony Apanatos. I'm head of agency at the Lorenz Consultancy, and I'm going to be giving a brief overview of the central London commercial property market and what we've seen over the last few years. We've seen top grade A rents at pre-recession levels in 2008 of circa £120 a square foot. In 2008, late 2008-9, when the recession hit, these dropped to about £80 a square foot, and over the last few years they've been rising to, again now, we've seen many deals at £115 a square foot plus, so effectively the same levels they were pre-recession, and there's rumours of offers close to £150 a square foot in certain buildings, including a couple on Berkeley Square. In Midtown, Holborn area, you're looking at £45 to £50 a square foot maximum, and in the city, £55 to £60 per square foot maximum for top grade A rents. Other than rental values, we've also seen that tenants' incentives to take space have decreased since the height of the recession. So in 2008-9, a tenant's incentive to take new refurbished office space on, say, a 10-year lease was effectively 2 months per year term certain in the West End. This has dropped as the market has strengthened, and so tenants' incentives now to take space on new refurbished space is circa 1 month or less per year term certain. When more office space comes online during a recession, obviously development decreases because there's no point bringing new buildings to the market when there is an oversupply in the market. But because of the strength of the occupational market and rents coming back and office space decreasing, one example being a building that we were marketing in Hans Crescent in Knightsbridge. Our client there was Barclays. They were disposing 32,000 square feet, floor plates of 8,000 square feet. They instructed us to market on a floor by floor basis because we didn't think there was a chance of getting someone for the whole space. Before we've even formally started marketing the space, we had one occupier come along for all the space, about 30,000 square feet. We were quoting £55 a square foot, and we got it away at close to £54 a square foot on the entire space. So that's just one example of the strength of the occupational market. When we see capital values on residential higher than that for offices, obviously there's a temptation for residential developers to convert office buildings into residential use and take that uplift in capital value. Coupled with the fact that planning rules have been relaxed, a lot of buildings that used to be residential 20-30 years ago have gone and have been offices for the last 20-30 years, have actually been bought by investors converting them back to residential, and that alone has taken out about 700,000 square feet from the West End. The costs to occupy office space today are historically at a very low level, even though rents are at the highest per square foot basis that they've been for a long time. For a business to occupy office space in central London at the moment, it's only really about 13 to 15% of their total business running costs, whereas historically these used to be a lot higher. And our experience over the last few months as well in the investment market is that for every building coming onto the market, there's multiple bidders, and quite often it goes for significantly above what is being asked for. One example is a building we were marketing in Bowling Green Lane in Clerkenwell, just under 9,000 square feet. We were asking offers in excess of £2.5 million. Within a week we had 10 offers, and we finally agreed terms at about 20% above what we were asking for. So where is the demand coming from? Well, you've got the UK internal demand from occupiers and also the mature market investors such as the pension funds, etc. But also 70% of the market, the investment market in central London offices this year, has been from overseas investors. Obviously London, from an occupational basis, is seen as a good business base because the time zone allows you to trade with East and West in the same day. But also from an investment perspective, especially during a recession, London is seen as a safe haven. All the indications are that the UK commercial property market will continue to improve and strengthen, as we have seen over the last few years since the last recession. I hope this has been an informative talk. If you have any questions, please feel free to call or email me, and thank you for listening.